Hello, everybody. Welcome to another episode of SimpliFinance. This is episode 16. Today is Wednesday, April 8th, 2020. And today is just a little bit different. I'm going to basically just walk you guys through what I did yesterday. Kind of felt like I needed to walk the walk with what I was preaching on Sunday. So if you guys listened to Sunday's podcast, or if not, essentially what I asked everybody and really just gave guidance to everybody to do was to use this time with the crazy stock market volatility. If you don't feel confident or comfortable investing right now, was to basically just use the stock market as practice right now. So a way you could do that, I shared my stock market rebound tracker in the show notes. I've been sharing that after every podcast, and it's basically just a Google sheet that you can see, and it has a lot of the companies that I'm really paying attention to right now. So the companies that I believe are going to bounce back in a strong way, and are companies that I'm looking to invest in coming up. So anyway, what I just did yesterday was kind of do exactly what I told all of you should try, which is just, I basically started a new tab in Google Sheets, and I quote unquote, fake invested in the stock market just to see like, hey, if I jump back in today, what would happen? And I'm going to keep doing that over probably at least the next week or two. I'm not putting any more cash into the market right now, but trying to just test some theories I have, and especially with earnings season starting. And today, as a reminder, one of the big earnings that I'm looking forward to seeing is Delta Airlines. So one of the first major airlines to release Q1 earnings will be today. So it's going to be a fun time to practice. This is probably going to be a very volatile few weeks coming up here with earnings and with all the daily updated news from the coronavirus. It's kind of hard to really feel confident in anything right now when it comes to investing. So anyway, I just want to walk you guys through kind of what happened yesterday, day one, explain to you what I did. And I hope a lot of you can take this and do it for yourself. So if you did want to go check it out, again, the stock market tracker is in my, in the show notes. I apologize. Sorry. There's a link in there that'll take you to the Google sheet. And there's a second tab in there called practice sheet. And that's just where I basically did what I'm talking about. So I just pretended like I had $2,000 in cash ready to invest. Yesterday, technically, I invested all but about $650 of that. And what I decided to do was to basically test the airline volatility that's been going on. So I invested in American Airlines, Southwest Airlines, and then one of the companies that has really been tanking, but I think inherently is going to do a lot of good. People are always going to bounce back to this, is Starbucks. When this all comes back to normal, I think people are going to go back to their normal daily schedules, and coffee is definitely going to be one of those. So I invested in Starbucks, and then a company that I've always been bullish on, and honestly, I just think they're going to continue changing the world and taking over the world, for lack of better words, is Amazon. So I invested in all four of those. Not an even split. I'm trying to look around my phone here. It was basically split 15, 20, 25, 35. That doesn't add up to exactly 100, but that's just rough numbers of how heavy I weighted each of these. And it was not good. So I lost $42, which was like 4% basically. So in one day of investing, hopping back in, I lost 4% of what I, quote unquote, again, fake invested, if I'm keeping track. And as of this morning, I've actually jumped back. I'm only down 1% now. So out of the, $1,500 or $1,600, $1,500 that I actually, again, fake put in the market, I'm down 14 now. So coming back up, and this is the game. This is what I'm talking about. There's people that I think And again, the reason I kind of wanted to do this, I think a lot of the people I talk to have a mixture of really being short-minded and, some others I know are just long-term thinking. This is a good example of, there's going to be a time, where myself, as well as hopefully all of you, jump back into the market if you've been out of it because of all the coronavirus news and volatility. So, but this is a good example of how, obviously, if this was me yesterday, I would have been ready to go, throwing money back in, and would have lost, not a ton of money, but enough that you're kind of like, shit, I could have held on to it and just had the cash, right? But this is kind of the game of the stock market, and it's a long-term game, right? So you can already see today, like I said before, I'm back up. American Airlines is up almost 6%. Southwest is up 2%. Starbucks is up over 2%. So it's a long-term game, and I think what we're going to learn over the next few weeks is we're going to have a lot of these days that are up and down, right? We're going to have earnings come out that's going to really swing the market. So you got to really trust the math, or really the backing of the company. So when I say that, whatever the reason is, whether that's something you're seeing in their financials, and I got this from Warren Buffett, like really believe in their leadership. And that's something I could go into for another topic someday, is just like how I evaluate stocks. That's probably actually a really, really good one. I'm gonna write that down. But whatever it is, you need to make sure, you are, what's the right word? You gotta make sure that you're not being emotional in your stock buying and selling habits. That's really, really hard to do in these times because it's just so easy to get stressed out and want to sell again, or jump in because there's great news and the market's on fire. Like, we're seeing a lot of huge swings up and down lately. So just something to consider. All right, so back to what I did yesterday. I kind of want to walk through kind of a summary of why I also lost the money too, and just a little bit of what I learned while I tested out my theories. So again, I invested in a lot of the companies I've been watching. So for me, one of the things that I think makes investing more interesting is the companies that you're investing in individually. So what I mean by that is you obviously can go on Robinhood, and that's what I use, and you can buy, like I said, Amazon, Starbucks stock directly. For me, like, investing in individual companies is always going to be more of where I want, like, my growth drivers to come in. I want to make real money off of that. Hopefully a lot of you who at least have consistent work are also investing in 401ks if you have that through work, and which is usually backed by mutual funds. So a lot of that is like really long-term, most of the time you're probably going to be sitting on that for 40 plus years and not touching it. So the stuff that I'm talking about today is, you're investing in companies directly, but these really, depending on your strategy, and it could be different than mine, but I want to see growth in a lot of these, right? Or what I'm starting to really think about is dividend payouts. So those are the two big ones. One thing that, without going into a ton of detail, this is another great topic we can talk about in the future, is something that hurt me yesterday, and I kind of knew this was going to happen, but I was testing it either way, was the pre-market performance actually stunted a lot of what I could have made money on yesterday. So what does that mean? I'll kind of break that down. So obviously the market is open, depending on where you're at in the country. There's an open and a close time for the stock market, and that's just where essentially those are the times the markets are open. That's when you can buy and sell shares of stocks. But there's also what's called pre and post market hours. So a few hours before the actual market opens, there are a small number of shares that are available to sell, and you usually have to pay a premium through a brokerage to actually have access to that. And really the people that get to make the biggest moves in this are large institutional investors moving lots of money. The pre-market is a lot more volatile, and it's not as, I guess, simple to buy and sell stock. There's usually not as many people buying and selling, obviously, because it's pre-market, it's a limited amount. So you don't always have a buy and a sell that matches, like we talked about, and how stocks work. But what happened yesterday was there was a lot of good news. out there. A lot of people were jumping in and buying a lot of stocks. So before the market even opened, a lot of those companies that I purchased yesterday were already up 5 to 10, even more than that for the airlines before the market opened. So what happens is, if the market closed, let's just say American Airlines was at $10 yesterday, and in pre-market today, it's up 10%, right? Well, that means when it opens right out the gate, it's already at 11. So the 10 to 11 you missed out on because you didn't get to invest in it before the market. There's kind of a whole thing we can go into on how that works and why, and definitely, it's a little confusing. And I think some people feel cheated out, which it's just one of those things you got to learn a little bit more about it. But I kind of felt that way yesterday, right? Like I felt like I had some really good strategies. All of the companies I invested in had really, really good days. So in theory, everything that I wanted to invest in should have worked and I should have made good money yesterday. But because of the pre-market, I was not. So that's kind of like a summary of what happened to me. That's basically why I actually lost a lot, because they grew so much in the pre-market that by the time a lot of these stocks launched at the open of the market, people actually were jumping back out and selling. So people actually made a lot of money yesterday from pre-market selling. And that's kind of why for this, I kind of want to talk about this a little more. That kind of goes back to your strategy. So what a lot of my friends have been asking me lately is, what companies I'm investing in short-term to essentially day trading, which if you haven't heard of that, I'm saying this a lot today, but that's another great episode to get into. But there are people that do that full time, where they're buying and selling the same stock throughout the day to make an income. That's a real thing. That's a real job. People do that every day. It has a ton of complexities. And if you're in the short term, you're also relying on a lot of things in the news. It's extremely volatile, and depending on how much money you have to throw around and your general knowledge of day trading, it's not what I suggest. A lot of people that I talk to, I'm always telling them, don't get into the hype of the day-to-day, the news. And honestly, I used to do that, and then I got this strategy from reading a book that Warren Buffett suggests. And for me, really, I'm more on the flip side, where it's hard not to get sucked into the day-to-day news and excitement that comes with day trading. But I'm really looking for companies who, and I'm a finance guy, right? I work in corporate finance now, so I have maybe a little more passion than most at looking at the financials that companies release. So I'm looking for financially strong companies first and foremost. And so that then, if you're investing in a company that you really believe in long term, you're willing to kind of ride the waves of the good and the bad news, because over time you're confident that that's a strong company and they're going to perform. For any of you that are just getting started, I would highly suggest kind of going down that route while you learn more about the market. Yesterday, for what I did, is a great example where you can really get sucked into things and buy just on a whim, and then sell on a whim, and you don't really learn anything from that, and you potentially could lose out on money over the long term if you would have just stayed in it. So that's kind of my takeaway from yesterday. It's a lot of fun. I would suggest all you to at least do with what I'm doing with practicing. It'll build a lot of confidence for when you put real money in, or when the market comes back. If you're someone who already has invested a lot like me, honestly, it allows you to test things that I honestly haven't done a lot of, because I've been putting actual money in. So to me, this is a lot of fun. This is where the stock market can be a little less stressful and a little more fun. Try out some strategies and fail. You're not going to learn anything if you're always making money off of stocks and getting lucky. Maybe it's not luck, but a lot of times if you haven't had a big loser yet, you definitely will eventually. That'll be a fun one to talk about. My worst losing stock of all time. That's for another day, but a really good story about not following the hype of the news that can really get you. So anyway, not a super long one today, but just wanted to chat about what I've done. If any of you have questions, and if you want to start your own and need help starting your own practice sheet, and just want to kind of get a rundown of what to do, definitely leave a comment, message me. Happy to help any of you get that going and figure it out. Again, thanks so much for listening. We got a little bit of good news today with the coronavirus. It seems like we're slowly but surely starting to get to a point where we're not seeing drastic increases day over day. It's still going to be a long time. There's still a lot ahead of us, but I think it's exciting and reassuring to see that. So anyway, hope all of you have a great day, and I will talk to you guys soon.